Firstly, I think it's because we're very small. When we concentrate on the small cap area of the market, you can't do that effectively with a big fund. So with a fund that's less than $50 million, like the Cyan C3G fund is at the moment, that gives us the ability to be really nimble, but also make meaningful investments in some of the small companies that are doing fantastically well.
We own the business, Dean and I personally. We only run one fund. And we focus very carefully on a certain area of the market to provide growth for our investors.
I think the typical investor is one who is sophisticated enough to make their own investment decisions in terms of investing in funds. They don't want to be in a mainstream fund like an AMP or a perpetual, but they don't want to manage their own individual equity investments. They don't want to manage their own stocks. They want to outsource it to us because we'll look at those stocks 5 days a week and find businesses that they won't even know about.
Generally smaller companies that provide good growth prospects over the next 2 to 5 years. And to do that effectively, we've structured the business around it, meaning we are small and we will always remain small. That gives us the flexibility to focus on certain areas within the market, and by such we exclude certain areas as well. And they would be mining companies and biotechnology companies, where a lot of risk is evident within the underlying investments. So we very much focus on companies we understand, that we can invest a small amount of money in that will still provide a material return for the fund and provide growth over the next period for our investors.
Yeah, so we think it's really important to have a diversified portfolio, but not so diversified that you just end up with an average return. So we typically have around about 20 to 25 equity investments, and the balance of that's in cash. And that cash balance can move around from anywhere, well, theoretically from 0 to 100%, but typically between 15 to 40%. Yeah, good question. If you think about the colour spectrum, you've got the primary colours, which are red, blue and green, which were all in the old cathode ray TV, and the subtractive colours that are magenta, cyan and yellow. The interesting thing about cyan is cyan actually has no red in it whatsoever. So when we thought about investing and we thought about the analogy between making money being in the black and losing money being in the red, we figured that cyan was the perfect name for the business, in that we'd like to think investments in cyan have little to no red in them, in that we just don't lose money.